Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty, Bank Nifty from here on, as well as the key data regarding the rollover. We'll also be discussing the main sectors in focus in trade today, as well as the next few trading sessions. First up, coming to the update in the global markets yesterday. So in Thursday's trading session, the three major US indices experienced strong bullish momentum for most of the trading session. However, profit booking emerged in the latter part of the day, with the Nasdaq S&P 500 to close in the red, while the Dow managed to finish with a gain of 0.6%. Going ahead, the zone of 5,560 will act as the immediate support for the S&P 500, while the upside, the zone of 5,650 will act as the crucial hurdle. Coming to the update regarding Brent Oil. So Brent Oil has taken support near $77 a barrel and witnessed a pullback of nearly 2%. Going ahead, the zone of $80 will act as the immediate hurdle for Brent Oil. Coming to the update regarding our markets. So in the August series, Nifty Futures has experienced significant volatility, with 11 trading sessions opening either with an upside or a downside gap. Throughout the series, it has fluctuated within a 1,300 point range, underscoring the heightened market volatility. Despite the heightened volatility, the index reached a new all-time high and closed the series above the significant psychological mark of 5,100. A steady sector rotation has played a crucial role in supporting the markets and maintaining these elevated levels. The rollover for Nifty index has experienced was higher by 77.49 compared to the previous month's rollover of 69.69 and the 3-month average of 74.50. Going ahead, the index is likely to continue its northward journey and test the levels of 25,240 followed by 25,310 in the short term, while on the downside the support has shifted higher closer towards 25,000. Coming to the derivative data, so we had the September futures which ended higher by 0.43% and the cumulative open interest has dipped by about 7.17. That's mainly due to the start of the new series. Gradually through the first week of the September series, we should see the open interest gradually inch up higher. Among the constituents of the Nifty index, 15 stocks have witnessed long built up, 6 stocks have witnessed a short covering rally, 19 stocks witnessed short built up and 10 stocks have witnessed long unwinding. Coming to the option chain data, so 25,200 has significant call open interest followed by the 25,500 strike, and on the put side 25,100 has substantial open interest followed by the 25,000 strike. For the next week's weekly series open interest, so we see the PCR which is currently at 1.26, while for the September monthly series the PCR is at 1.53. Now coming to the update regarding Bank Nifty. So Bank Nifty underperformed the frontline indices for the second consecutive series. The rollover for Bank Nifty Futures was higher at 67.75 compared to the previous month 61.97 and 3-month average of 66.80. Moreover, the rollover cost has surged to 0.59 as compared to 3-month average of 0.52. Going ahead, the zone of 51,400 will act as the immediate hurdle for the index. Any sustainable move above the levels of 51,400 would lead to a sharp upside rally towards 51,800 followed by 52,200 in the short term. On the downside, the zone of 50,900 will act as the immediate support for the index. If the index slips below the mark of 50,900, the next support is placed in the zone of 50,600. Coming to the derivative front, so the September futures ended higher by 0.12% and the cumulative open interest of the current, next and far series has surged by 7.4%. Coming to the key market indicators, so since the last couple of trading sessions, India VIX has been oscillating between 14.3 and 10.84. A clear breakout beyond this range could trigger the significant directional move in the market. Coming to the advanced decline ratio, so despite the index reaching a fresh all-time high, the advanced decline ratio is skewed towards the declining counters. Coming to the key sectors in focus, so potentially outperforming sectors based on rollover data: pharma, healthcare, IT, oil and gas, FMCG and financial services. These are the potential sectors. Potential underperforming sectors based on rollover data: metal, PSU and reality. Coming to the FII data, both FIIs and DIs were net buyers to the tune of 3,259 and 2,690 crores respectively. That's a wrap of today's edition of the podcast. Thank you for regularly tuning in. Wishing you all a happy and energetic trading session. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.